Good evening, everybody. Happy Wednesday. A lot to go over tonight, but I'm going to keep it as general to some degree as possible because we have a lot of things coming up in the next week or so, and I don't want to overwhelm you because you got a lot of things going on. But I've set up the course these last 10 days to help you, especially for those who are, got a lot of things going on, have other courses, and trying to make it as stress-free as possible these last few weeks. And as you're finding out, this is not an easy class, especially online. You have to be engaged on a regular basis to get the material. So I'm going to talk about a few things tonight. I have posted the grades for the students who have given me their assignment 3 work. Those grades are posted and your files have been returned to you. Some students in our group have still to post, and so I'm not going to go over the solutions tonight in class. I will go over the solutions this Saturday morning in our Road Kings review session, which will be recorded. This Saturday morning at 10:30, I'm having a review session for teams who have some questions or concerns as they put this together, and I'm going to address some of those concerns later on this evening. But in that review session, I'll go over assignment 3 solutions and review them Saturday morning at 10:30. I will be recording that review session as well, so people who cannot make Saturday morning can listen in at another time. So that's when I'll go over the assignment 3. If you did post your work, I have returned your files to you. If with some highlights and some areas where you were off. I think one of the I can't say it. I'm sorry, I can't even comment on the on that because we still have some students working. So again, I will review that in our Saturday morning Road Kings review session. So people who, because a lot of that information in that assignment 3 you will use in the Road Kings case. Okay. In addition to that, we have a final examination coming. Good God, Professor Hassey, lighten up. We have a final examination coming, which will be posted, and this is something a little bit different. I'm posting it on Monday of next week. You'll have a full over a week to do it. I'm doing that for the students who want a head start on that and want to do it, and also just have it more time available. In my introduction video for next week, for week 8, which I will post on Monday, it's going to be a little bit longer than usual, probably about a half hour. And in that introduction video, I'll be going over the final examination and its makeup and what to look for in that final examination. So when I post the final examination next Monday, October 11th, I will also go over in an introduction video on Monday the final examination. All right, so look forward to that. I have also posted, and we'll look at this evening, a final examination outline is already posted in the examination and assignments file folder in Blackboard, an outline of what I'll be looking at and for in the final examination. Okay, so we'll talk about that. Then we're going to take a look at chapters 16 and 17 tonight, just a couple of sections out of each chapter about debt financing, about capital structure, about cost of capital, of which we've already discussed a lot in this class, and then take a look at dividends. The main source of return in cash flow to investors by companies is paying dividends. And we'll talk about the definition of dividends. That leads us into next week, where we have 2 more chapters to go over, chapters 18 and 19. And those particular sections, as you can see in your agenda, I will go also over these sections in my final examination introduction video, as I mentioned earlier, which will be posted next Monday. I will review all of this for that in that video. Then when we have class next Wednesday night, our final class of the term, if you can believe it, I will answer and go over more final examination review questions or any other review questions that you may have. And also, you know, our Road King case is due Tuesday the 12th, but naturally there are extensions, and I'm sure a lot of you, your teams will request extensions on that. And I can answer any questions on that session on next Wednesday about the Road Kings case. But I particularly point you to Saturday's session at 10:30, where you can review specifically your team. So where you should stand now, you pretty well should have all your numbers crunched and you're beginning to put the paper together. And as you're crunching the numbers, probably some problems have arisen or questions. That's why we have the session on Saturday to help your teams and you out with that. I haven't had many comments or communications about any difficulties with teams and they're communicating with each other. So I assume everything is okay, but I don't want to on Saturday or next week get some anxious emails from me. I haven't heard from this person in 3 weeks. I go, why don't you just tell me about this earlier? So make sure you're communicating and getting this all together in these final days of our course. Okay. And another thing that I've posted tonight to our Blackboard is it's course evaluation season again. Some of you probably have received emails on this already. If not, I'm going to explain this evening the course evaluation. They're changing, the powers that be at the university are changing to a different type of evaluation. More questions, but at the same time, it gives us, me, the professor, and the program, more feedback from you guys, which we should be getting feedback from. So we have a new way of doing course evaluations. There's a link in Blackboard that all you do is click on and you can complete it. Naturally, a lot of you probably wouldn't be completing the evaluation now. There's still a week left. But as we wind down the class, I would appreciate you all to take advantage and do your evaluation. And here's the reason why. Number one, it makes the program better. Now, you're probably going to say, well, Mr. Hesse, I've already taken your course. How's that going to help me? Well, it's not. But as a lot of you know, some teachers need to be reminded that they're not doing a good job, or that some teachers need to know that they need to be reminded that they're doing a good job and their methods are working or not working. We depend on you all to give us that feedback. All right. And the key thing is the powers that be read these and hopefully, knock on wood, take these to heart. And so the only incentive I can give you for completing the course evaluations is that I assure you, if you do complete your evaluations, I will post your final grade by October 22nd. So you'll know what your grade is in class. If you don't do the course evaluation, it has nothing to do with your final grade. It has nothing to do with anything except giving me feedback or us feedback. But you will not be able to get your final course grade until a few weeks later when the registrar posts that to your MyLaverne. So it just gives you a couple of weeks extra time to get your course grade. And some of you are probably saying, well, I don't want to see my course grade anyways. No, I'm just teasing. But that's the purpose of that. And so we'll look at that. So as you can see, a lot going on, a lot of things happening. And again, I urge all of you, and some of you are very good at this, some of you a little late in it, communicate with me. If you have questions as these things come together, your Road Kings case, the final examination, the course evaluations, or anything, if anything, or you have questions about what's going to happen in your program in the coming terms or sessions, do you have questions? If you have questions about courses or anything, I can perhaps give you some feedback on it. Communicate with me and I will get back to you. I think I do a decent job getting back to you as soon as possible. And sometimes I get a little bit backed up, but please communicate with me if you need any help or have any trouble or have any issues or have any good things that are going on that you want to let me know about. That's important to me as your professors. I probably will have some of you again down the road in other courses in the program, especially if you go on to graduate study. Now, I'm not saying you should go on to graduate study. That's up to you and your own particular welfare. But I usually end up with a few students I've had in 330. I will see them again in the graduate program. in the MBA studies. So that'll be a good thing for me because I enjoy having return students. All right, that's where we are. And so we're going to go over these things a little bit at a time. And as you have any questions, raise your hand, give me a shout out, and we'll take care of that this evening or going forward. Before I get started, does anybody have any comments or concerns before I get started with the Dodgers losing 1-0? Anything? Okay, then let's begin. We'll start off this evening with our Blackboard site and a couple of things that I have posted in the last 24 hours that will be of some help to you all or add to your stress, whatever. A couple of things. First of all, in the course information file folder, but also in week 7 and 8 file folders is the course evaluation links. All you need to do is go into these links, just click on them, and up will come the evaluation for you to do. Now, here's one question that I have not yet to be answered, but a lot of you probably know what your CRN code for this class, because you all come from different areas. We have some students here from the Inland Empire, from San Fernando Valley, from Vandenberg Air Force Base, from the High Desert, and from Kern County. Geez, I could have a travel show, but we have students coming from all over. So each one of you students have your own particular CRN or course code for this class. And if you forgot about it, don't worry about it. Just click on any link and do your evaluation. But if you happen to know that your CRN is 2536, then click on this link. If you know that your CRN is 2383, click on this link. But don't make a big deal of it. If you don't know what your CRN is, just click on any link and that'll be fine. But here are the links to the evaluations. And again, many of you say, Mr. Hasse, it's week 7. I don't even want to think about this. And I agree with you. But down the road, next week, after you get everything done, this is a good thing. Now, a couple of things to note on this. They'll be accepting, or this is open until Monday, October 18th. The evaluation links are available to students through Monday, the 18th. We'll be posting some work even later in that week. Some of you may complete your work before then, some of you may not. But that's the guidelines by the people who are managing this evaluation links for our university. October 18th is the cutoff to do these evaluations. And don't worry, I will remind you down the line. Okay, that's one thing. Next area, in the assignments and final examination file folder, here is a list of an outline of how the final examination is going to look next week. It's basically 4 sections. Multiple choice from the first 3-4 weeks of the course. A fill in the blank statements from capital budgeting analysis, chapters 8 through 12. Some short answer questions from the chapters we're discussing this week and next, and I give you the types of questions I'll be looking at. And then a final version of your portfolio. Remember that? Your portfolio. As of Friday, October 15th, you will figure out and determine the ending value of your portfolio, the gains and losses in dollars and percent of your portfolio, and the changes in the market indexes in your portfolio as of Friday, October 15th, and that'll be a part of your final examination, that spreadsheet to update your portfolio, and you all have done that during the course of our 8 weeks. I will be reviewing this in my introductory video to week 8 on Monday of next week and going over specific examples of these types of questions in my review session in that video next Monday. But that's what the final examination looks like. It's going to be multiple choice, fill in the blank, short answer, and your portfolio. It's designed, now I'm not going to give you a final examination. It's going to take you 3-4 hours to do. That's not fair with all the work you guys have all been doing the last couple of weeks. This examination is designed to take 1 hour. 1 hour only. All right. Hang on, Darlene. I'll get to you in a minute. It's designed to take 1 hour. Now, 1 hour for you, you probably say, oh, you Mr. Hess, if it takes you an hour, it's going to take me 3. No, it will take you 1 hour to do. All right. So just so you know that this is not going to be an overwhelming assignment that you're going to have to spend the late hours of every night trying to figure out and do. All right. It's designed to answer questions that are key for you to move forward in your studies in your business degree, to get you prepared for the 496 capstone class, to get you prepared for any other classes that you have to go in your business program. So that's what the nature of it is. So it's designed to be short, somewhat short, like an hour, and sweet. So that, and I'll talk more about that in my video. Darlene, you have your hand raised.
Yes, sorry, I don't know if it's premature to ask, but just for clarification, I thought I heard you say the short answers. These are the types of questions you ask. So these are not necessarily the questions you will ask on the exam. Is that correct?
In the short answer questions, those are not the exact questions I'll be asking, but they'll be over those 4 subjects.
Oh,
so a short answer would be, please explain to me the capital structure of a firm. Okay, Mr. And I'm going to answer this one because you already know it because you're doing it. You've been doing it the last 3 weeks. The capital structure of the firm is the liabilities and equity that produce the capital for assets. That's the capital structure. It's made up of the liabilities and equity. Okay, that would be a short answer to that type of question. Okay, and in my video on Monday, I'll be giving examples of questions involving all those 4 topics. Cash flow management would be a question about the cash flow cycle, which we'll be going over next week. The percent of sales forecasting method is just a definition of what it is. Percent of sales forecasting is a capital forecasting of what you think you're going to need in new capital investment to purchase assets to meet the needs of your company, growth, stuff like that. And I'll define these a little bit more, but they'll be short answer, mainly definitions about these 4 topics. Does that help, Darlene? Okay. All right. So this is an outline. And I know some of you are saying, yeah, when will I look at this, Mr. Hess? I got to do the Road Kings. I'm going nuts. Okay, but there it is for some students to begin to look at. And again, I will review this next week. And so there it is right there of what to expect. And again, this is not designed to take you hours upon hours of work. It's specifically designed to cover the final basis of our course. So I know you're prepared to go further into the program, and it's going to last about 1 hour. There's going to be and I repeat, the only calculations you're going to do as far as spreadsheets is your portfolio. You don't have to do any present value calculations. You don't have to do discounted cash flow. There's no warranty calculations. You've done enough calculations. The calculations are over. These are particularly just explanation and definition questions. So I know you're prepared to move on in the course. So do not worry about spreadsheet work in the final. The only spreadsheet you'll be doing, and you've already done it before, is your portfolio update. That's it. Okay, so I hope that made some of you a little bit better, feel better. Okay, so that's the final examination. All right, hang on, I'm losing my notes here. Okay. Now, here's our week 7. Maybe some of you have seen the introduction video, which is basically a definition of corporate finance. Here's our review session link for Saturday. You're thinking about coming on Saturday, click on that link, you're there. Again, if you can't make it Saturday at 10:30, I'll be recording this session. You could maybe even send me questions in advance via email or text, and I will make sure I answer those questions if you're not there, but you'll be able to see it in the recording, in the recorded session, okay? This is a real good, excuse me, is that good English? This is a very good video. It's only 6 minutes long about capital structure. And I'm not going to take the time out tonight to look at this, but this gives a perfect definition of what capital structure is in corporate debt. And it's kind of fun. This gentleman, I don't know if any of you all listen to National Public Radio. There's a great show on every day in the morning and in the afternoon called Marketplace. Anybody who's interested in economics and finance should listen to this show every day, and you'll know what's going on. Marketplace. Well, this gentleman is a producer of Marketplace. He runs the show, and he is defining capital structure by using an airplane, of all things. He's using an airplane to define capital structure. And it's quite clever. And I urge you all to look at this. You're going to have questions in this concern on the final examination. So that's kind of a fun video to look at. You guys are probably getting all videoed out, but that's okay. Here's a good video about dividend policy. And I'm going to go over this tonight, but we're not going to see these videos. But if you want to know some specifics about dividends, these are some good videos about dividends. See, one of the things about online, and I'm sure all of you are now becoming quite expert about it, is sometimes the professor doesn't go over everything, but he or she should tell you what he's going to assess you on, and then you can go into the Blackboard where that source of information is and review it. And you are going to have a dividend question on your final examination. Now, one last thing. Okay, Paulette, that sounds good. Thank you for that chat. Let me bring this up. One of the things, and I don't know if any of you had a chance yet to look at this, is I provided in the Road Kings file folder a sample case paper that gives you a sample of what I feel is a good format and one that's going to get you a good grade in reading or putting together the paper. So now all of your team members and you are putting together, hopefully you're beginning to finish up your numbers and you're putting together the paper. Here, this is something you should take a look at because this is the format that I feel will give you the best grade. And notice the title page. Notice the abstract on the second page. It explains what the paper is going to be doing and gives me, the reader, an idea of what you're going to be trying to do in this paper. And then it goes forward and it examples all the questions. They don't list the questions, question 1, 2, 3, 4. They just write the paper. And this is the format that I enjoy. Now you can write the question numbers and answer them that way. That's fine. But as far as an academic research paper, this is a better way of doing it. And notice I handle each question by doing the headings of the paper, the energy cost situation, financial analysis, working capital. Notice I've blocked some things out because I don't want to give away too many things. But notice the paper goes forward, and note the use of graphics, summarization tables. You don't have to put these in, but this is an A paper, and I wanted to show you what an A paper is. It's including graphics, it's summarizing everything, because remember, you're giving me a spreadsheet with all the work on it, and that's like your exhibits. But if you can find a way of putting snippets or tables of key data into your spreadsheet, that would be pretty good. And so this is what I wanted to show you, that this student put this information is to highlight the points that they were trying to make, especially in the recommendation, their conclusion. And then they introduced outside consultations. In other words, look at a couple of students interviewed me, and there is a couple of students interviewed some other professors or fellow students. And here are the references that group did. So in other words, this is an A paper. This is something that I look for when I read it, is not only a bunch of well-written material, but added graphics, added information to really emphasize what you're trying to say in this document. And make sure you put all your team members' names on the title page. I don't have to guess who's doing this or who's doing what. And if some of you feel like it's necessary, write down in your paper under references what each team member did in this work. That wouldn't be a bad idea to do that. You don't have to, but that wouldn't be a bad idea to say that. Okay, so this is a sample paper that you can download and print out and read and say, oh yeah, I think we're doing this, or this makes sense, or give you an example of what I'll be looking for when I do read these next week. Okay, so this should help you if you've not already seen it. Okay, there's that. Then there's this. And we've looked at this before, but I'm just going over some key things. This is that checklist we have talked about in our sessions for this Road King case. Key information, key variables that you have to make sure you have. One of the problems I saw in assignment number 3 from some students is they didn't have the correct variables from the assignment in their capital budget analysis. They didn't have the correct inflation. They didn't have the correct amount of variable cost. They didn't have the correct fixed cost. So these are things that you got to make sure you know the variables before you start inputting them into your spreadsheet. Okay. And that's important. Know what your inflation rate is. Know what your working capital is. Then know where it fits into. And most of you are doing a great job setting up your spreadsheets. You're following the templates. You're doing it well. The key thing though is to make sure you know what the variables are as you input this data. That's an important part. Okay, and this checklist, and you already have it, it's already in Blackboard, but this is just going over those key points. All right. And one last time, remember, a warranty cost is another variable cost in this case where you have to calculate 5 years of warranty into one number called a present value. You know what those 5 years are. It's given in the problem. Every year, 165 or 175. It depends on the controller. $165 a year for 5 years, $175 for 5 years. That's 5 years, not $165 5 years from now. It's $165 in year 1, 2, 3, 4, and 5. Now you discount that cash flow back to today, and that's your net present value, this variable cost rate for warranty. The key thing there is you need to think about, should inflation be included in that? And what will be your discount rate to discount it back to today's value? Okay, those are the key interpretations that you have to do in that analysis. Everything else is pretty straightforward. You know the selling price, you know the other variable costs, you know the fixed costs, all big numbers, and they're the variable costs right there. They're the fixed costs right there. They're all given to you. You just have to make sure you understand what they are and where they go. Yes, Chris, I've mentioned this before. Warranty costs should be on a separate line. So you're basically going to have a separate line for variable costs, these 50,000, 95,000, and the engine costs. Okay. And then a fixed cost line, and then a variable cost line for just the warranty. The reason I say that, have a separate line, it's easier for me to see that you got it right and you did it correctly. If you bump it up and put it all together into one big number like the variable cost line, then it's going to be very difficult to make sure you did it correctly. And that's just for my benefit because it's easier to grade. And also it's just easier for you to determine that and keep it separate. And so, yes, Chris, a separate line would be advantageous. Okay. Remember, this is a 20-year project. Some of us in assignment 3 didn't have the correct amount of years of the project. Make sure you know how many years the project is. Road Kings, it's 20. Okay, so there's a sample paper. There's that checklist again, and I'm going to be going all over these again Saturday morning at 10:30, and even answering any specific questions you or your teams have about the case. Okay. All right. Let's do this. Darlene, you're my eyes and ears. Do you see on the screen capital structure and restructuring?
Yes.
Okay, thank you. Okay, if any of you have seen the introduction video or any of the videos for this week, what we're talking about now is, okay, here we are heading into week 7 and 8 of our course. We've learned that the definitions of finance, maximize shareholder value, what the financial markets are. We're looking at financial markets in our portfolio of examples of the financial markets, how market values of assets or of stock change over time. We learned about the key to understanding a business is to, first of all, understand their financial statements. What is the income statement? What is the balance sheet? What is the statement of cash flows? What type of information that provides us? We have learned that when we're looking at investments or capital structuring or capital investments, we have to be concerned not only of the present value of those assets, but what they will be in the future value of those assets. The concept of the time value of money and being able to take a number in the future and see what its value is today. That's the present value. Or being able to take a number today and seeing what its future value is. That's a very important concept in understanding capital in finance. And then from that, we went into okay, now we got the capital. We got it either from debt, bonds, interest-bearing notes, or equity, issuing stock, finding private investors, Shark Tank, or making profits. And we take that money and now we invest it in assets. And one of the ways of determining whether that's going to work is what you just did in assignment 3 and what you're doing in the Road Kings is what's the return off this potential asset that we're investing today? What's the return in the future? And then we discount it back, that cash flow back to today, and do our return analysis. Net present value, internal rate of return, profitability index, and payback in years. Is that investment, is that borrowing of money or taking equity or using profits going to give us enough return to warrant that getting that capital? That's the capital structure mix. And now what we're looking at in these last 2 weeks is, okay, what's a little bit more details about this capital structure? What are the little bit more details that we need to know about planning into the future to get the capital we need? I'm sure a lot of you right now, or maybe some of you, it's October. It's the first full week of October. A lot of you are working at companies now where their fiscal year ends December 31st. Probably most of your businesses now are working on next year's budget, or maybe have that budget already completed. Why do they do that in September and October for a year that ends December? Because they have to plan and understand what's our numbers going to be in 2022. Are we going to need to borrow money next year to sustain the company? Are we going to need to borrow money next year to invest in new markets so we can stay competitive with our competitors in our market? Are we going to need to issue new stock, the most important or most expensive form of capital, next year? Or are we going to have enough profits from this year and prior years to help us finance our business going forward? That's long-term and short-term planning, chapters 18 and 19. So as you can see, this class as a basic core course in your business administration degree is making you see all the key areas of what corporate finance is about. What's the goals? How do we report it and analyze? Where's the money come from? How do we determine our returns? And how do we use this into the future planning of the company? And if any of you go on to more advanced work in finance or at the graduate level, you'll learn the strategies that drive these decision makings of the numbers you're finding out here. And that's graduate study. But let's not worry about that now or ever. Okay. This is important now. This is for you need to know to get your business degree and get out into the market or go within your company and say, okay, now I kind of know how you guys are doing some things here. So back to the discussion at hand from those first two sections of chapter 16 is, okay, I kind of get it now, Mr. Hasse. I know about bonds. I know about stocks. I know that we get this money and we invest it in an asset, and that asset provides revenues. We have expenses to match those revenues. Then we develop cash flow based on depreciation and all that sort of thing, and we generate cash flow, and okay. But how do we make sure that these cash flows are enough and sufficient to maintain the, what's a good word? I guess the viability of the company, the sustainability of the company? Well, that all is driven by the mix of debt and equity that funds these assets. If we have a lot of debt, that's a lot of interest expense, which is money going out the door with nothing being really generated. All right. If we have a lot of equity financing, that means we got to keep a lot of shareholders or a lot of partners happy, which means making money, having the stock grow. So how your company is structured drives a lot of the strategic decisions because of who you're trying to serve. If it's debt, you got cash flow issues, interest, paying off the debt. There's cash, you got to generate cash flow to meet these obligations. If you have equity financing, you have to meet the needs of the investors, which means you better make money every year or make the stock price grow, or I'm going to fire you, or I'm going to find somebody else, or I'm going to sell my stock and invest in something else. That's a lot of pressure that's driving the strategies of your company. So what a lot of companies do all the time is they restructure their business. They sell off divisions and get the cash and pay off debt. Or they issue new stock in the marketplace and use the money that they got from that stock and pay off debt. They restructure the capital structure of the company to either, if they have a lot of debt, let's get rid of this debt to ease our cash flow issue. If we have a lot of equity, what do our stockholders or investors demand out of that equity? What's their required rate of return? If it's too high, maybe we should think about making some profits and buying back some of that stock and taking it off their hands. So restructuring is always a key to financing in a business. Companies are always rearranging business. And I'm sure you work with companies that every now and then somebody says, oh, what happened to so-and-so? Well, they sold off that department, or they got rid of that department, or they sold off that division. And the reason they probably did that is that either that department or division wasn't making much profit, or they needed the cash and that department was very popular and they could find buyers of that division or department to give them cash to ease their debt position of the company. It's called restructuring. One of the great examples in the last 5 years is General Electric. General Electric was a dog with fleas about 5 years ago. They were dead in the water. They had too much debt. They had products and markets that weren't growing. It was a disaster. And over the last 5 years, they brought in a new management team to begin to clean that up, to go after new businesses, new technologies, selling off old divisions like their GE Credit and using that to pay off debt, becoming leaner and meaner. It's kind of like, I'm going to use this as an example. It's kind of a weird one, but it's true. A year ago, in the last year, I've lost 50 pounds, lost 50 pounds. And mainly because being at home, teaching you guys like this, I'm not running around in Burbank or Ontario or going to campuses and having McDonald's every night before class. I ate poorly doing that. So now when I'm stuck at home during the pandemic and teaching remotely, I don't eat junk food anymore. I lost 50 pounds by just doing that. Meaning leaner and meaner, meaning I feel a lot better. I don't look any better, but I feel a lot better. And at the same time, I'm helping myself out with my health. And for the long term, I'm a better person as far as health wise. Companies are exact the same way. They try to lose weight by selling off divisions and selling and getting rid of their debt, becoming leaner and meaner. That's called restructuring. And that's very important, especially for businesses that are getting a little bit stale and how they're running things. That's an important concept. And actually, borrowing and a lot of debt affects a lot of things. Business risk, financial risk, the leverage of debt financing. Now, sometimes debt is a good thing because it gives you deductibility, it gives you a tax shield. But when you have to pay out a lot of interest, who cares you're getting a tax break? It's still cash going out the door. But one of the key things in business, and we've talked about this, one of the central themes of our course is risk. What's the risk of doing this way versus another way? What's the risk of borrowing money or not borrowing money? And you just know from your own personal management, every day you make these decisions. Geez, I would love to take the kids down to Disneyland this weekend, but I'm going to have to use the credit card and it's going to cost about $800. If you've been to Disneyland lately, that's about right. And then, so you have to make a decision. Is it better for our family to spend the day together and go to Disneyland? Or do I just wait until I have the cash or the money saved up to spend $800 on a day visit to Disneyland? Not use the credit card, not use my financial leverage. I know that's kind of a dopey example, but it's on a larger scale, that's what companies have to do every day. Is it smart to borrow money to do something, or should they just wait until they got the cash? A lot of it's driven by not even them. A lot of it's driven by what their competitors are doing. Let's say your kids you say to your kids, well, we can't go to Disneyland. But then they come back and say, well, all our friends are going to be there because their parents are taking them. Oh, damn. I guess we're going. Well, it's the same thing when businesses. If you say we just can't afford it, but your competitors are doing that, in order for you to keep up with them, you got to do it. And that's a tough area of financial management for businesses. What's the risk involved, not only operating, financially? What's the risk of making these decisions? And the capital structure, how you finance a business, is what makes this drive, what makes this go. And that's very important. And that's why I like students to understand, or they probably understand this better than any other concepts in this class, because every day you're making a decision. Geez, I don't have any money, but I want to go out to lunch. I got to use a credit card. Or geez, the kids need some new athletic shoes, but I don't have the money. Well, maybe they have to wait. Oh, they're going to be in soccer next week. They need those shoes. So it's these things every day that drive your decision of how you structure your finances. And in business, it's even by billions of dollars. And that can be very important, because if you borrow money, that means some investors who own stock, their stock price might go down, or they might not get a dividend this year. That's what is called financial and operating risk. Very important to understand that going forward, especially. We all know about the cost of capital. We've done this calculation in assignment 3. You're doing this calculation in the Road Kings case. You all know the cost of capital is what it costs us to get our money in the market as of today in relationship to the capital structure of a company. And one of the drivers of cost of capital is the more expensive your money is, it drives you to bankruptcy risk. If your money costs are too high, then you can't function as a company. Just ask Radio Shack about that, or Blockbuster Video, or all the companies that go broke. Their costs became too high. And you have to monitor this all the time. And one of the key areas of this, I just lost my tab here. Hang on. This is a kind of a, you look at this and you go, geez, I need a beer to get through this graph, but I wanted to show it to you. It's called, when is a company in financial distress? When do you know you're in trouble? Well, you know this from your own personal finances. You're in trouble when your paycheck doesn't cover all your expenses. You know you're in trouble if you have, and especially if you don't have any savings, you know you're in trouble when you can't pay your bills with the income you're generating. That means your value is going down. You're decreasing value. Now, combination, if you're a business, it's the same thing, but also you have to add in, well, I'm losing money, but I'm getting a tax shield off certain things. In other words, I don't have to pay taxes on the deductibility of this debt. But at the same time, when is it the best? And if you notice this curved line here, this dotted line here, called the optimal amount of debt. At this point, notice this line here. This is the value of the company. Notice at this mark here, this is when the company is at maximum value. In other words, the cost of their money is low enough, I guess I could say, to generate the highest return in value. And then if their money gets more expensive, the value goes down. So at this point, and this is what, if somebody is ever asking you about, if you're interviewing for a job as a financial manager of a company, one of the questions they might ask you is, do you know anything about optimal capital structure or optimal position of a company? Oh yes, that's the cost of the money at that particular interest rate. That's when our company is producing the greatest value. An example of that, I knew when I ran my company years ago that my optimal cost of capital was 6%. If I had money that was more expensive than 6%, I wasn't going to be as valuable. If I had money that was less than 6%, I wasn't as valuable, because with that 6% money, I was able to invest in resources or assets that produced more return. But anything above 6%, the leverage or the financial distress of that additional debt brought down that value. And this is one of the key graphs in financial, is a company to find out what is their optimal value. What is their optimal cost of money? And companies spend millions of dollars a year with departments that their sole job within the business is to keep track of when they're at their optimal level. Sometimes they might never get there due to the market conditions and due to the economy, and due to their competitors. But at what point is this company at its greatest value with the cost of their money? And that is why we talk about this and study this, is because we want to find that value in our business that is at its peak, and what resources we got to get to that point, and what it cost us to get those resources or capital. That's huge. And then once we get to that point, if we want to stay in business and want to stay in our jobs, then we start paying dividends. Then we start making sure that the people who are investing in us and our ownership is getting the proper returns on their investments. One of the things that drives investors nuts, especially me, if I'm investing in stock, is when the company I see is making a lot of money, but they're not paying me any dividends, or they're not paying me a very good share of the profits of the company. Wait a minute, it's my money that's funding this business. Why am I not getting paid? That's a big deal for a lot of investors. And what is today? October 6, 2021. Next week, or even this week, some companies are announcing their third quarter earnings, how they did last quarter, September 30th. And at this time, they're figuring out what is their dividends going to be paid to their shareholders in the next month. And if they had a lot of profits, shareholders will be expecting a lot of dividends. And the process of awarding dividends in companies, and this is chapter 17, by the way, those sections that I mentioned, is when they declare the dividend, the X date is who owns the stock on this date will get a dividend. The very next day is called the record date, and that's when they cut the checks for determination of when they're going to pay them, called the payment date. So notice from April to July, that's 2 months of the span of when they decide and how much they decide to pay a dividend and when it's going to happen. And the same thing about that is that many times you could pay dividends in different ways. You might get a cash dividend, they write you a check, but sometimes they'll pay you a stock dividend. Sometimes they'll give you a stock dividend. Sometimes they'll give you, well, if we can't pay a dividend this year, so we'll split the stock. They split the stock price and now you own more shares and they didn't spend a dime. It's called stock splitting. But the main form of dividends is cash dividends. And that's where you get a share of the profits. And why dividends are important to companies' capital structure, because as long as investors of stock are pleased with their dividend, they're not going to sell the stock, because when they sell the stock, the value of the company goes down because the stock price goes down. Its market cap goes down. And that's why dividends are so huge. There's cash dividends, there's stock dividends. There's, as I said, there's stock splits. There's stock repurchases. Let's say Darlene is an investor in my company. Pick on Darlene. And Darlene's an investor in my company. And she's always hounding me about, Mr. Hasse, it's the end of the quarter. It's October 6th. Where's my dividend? How much are you going to give me? You know, where's my money? And really, a lot of investors do this. Where's my money? You know, if you guys don't do something, I'm going to vote the next time around to get rid of you. I'm going to do a proxy battle and kick you guys out. So what a lot of companies do is they say, you know, Darlene, we're saving our cash flow to invest in new products. If you don't like that, either sell your stock or we'll buy your stock back from you. It's called a stock repurchase. And many times Darlene might say, buy the stock back from me. So you will negotiate a price with the company and they will pay you for your stock and buy back the stock. If any of you have taken accounting recently, that transaction is called treasury stock. It's when the company repurchases the stock from you and buys back the stock from you in the market. So you're now out, but you get a stock price. You say, you know what? They're going to give me a price that's about $10 above the current market price. I'm going to cash out now and get the hell out of here and take my money and run. That happens quite a bit. A lot of companies repurchase stock from their investors. If I'm with a young company who doesn't have cash flow, but wants to pay a dividend, I'll invest in that company because they're giving me stock dividends. I'll own more of the company. So maybe sometimes for especially new startup companies or young growing companies, they'll pay because they want to save their cash for new products and new research and R&D. So they'll say, you know, Rick, we can't pay a dividend, but here's 2 more shares of stock as a dividend. Oh, do that after a few quarters. I'm going to own more stock and my holdings will be more valuable. And if the company keeps on growing, eventually I'll get the dividends on more stock. So these are ways that companies manage capital structure in the equity side to make sure their investors are happy and not creating too many problems. But if you do have a problem with shareholders, you just say, you know what? How about we buy back the stock from you? Now you got to have cash flow to do that as well, because you got to write a check to Darlene to give her the price of stock that she wants. But now Darlene is out and you don't have to worry about her always crying about stock dividends. And Darlene, I'm sorry for picking on you. But that's how dividends are so important to companies, hugely important to companies. Here's an example of a stock dividend. A company has 2 million shares of stock outstanding. Okay, 2 million shares outstanding. What does that mean? That means Paulette owns 1 million and Darlene owns 1 million. Those are 2 million shares of stock. Boy, they're loaded. But they own, that's the stock owned by the investors, 2 million shares. And the price in the market currently is $15 a share. So if you go to the Wall Street Journal, that's the price in the market. The company has decided to declare a 50% stock dividend to their shareholders. How many shares are they going to distribute when the dividend is paid, like at the end of a quarter? So if they have 2 million shares, that means they're going to pay out 50% of those 2 million shares. They're going to issue another 1 million shares of stock to the investors. And that means now there'll be 3 million shares of stock outstanding. Whoa. But is the company spending any money here? No, they're just issuing more equity. Now, the downside of that is you better know now those shareholders have more of a stake in the company than before. They now own 3 million shares. So they're really going to be unhappy if you're not making any money. But in the short-term temporary area, that tells shareholders, hey, we can't pay you cash, but here's some more shares of stock. And a lot of companies do this. I bet you if you go to your 401ks or your IRAs in mutual funds or ETFs, and when it comes to the quarter or when it comes to the end of the year, and you look up the companies that you are holding for and see how you've gotten returns on that company over the last 12 months, I bet you some of you have gotten stock dividends, and that increased your holding in your 401k or in your IRA or whatever. The company awarded stock dividends and you didn't even know it because your investment manager runs all that. But that's an important way of distributing and managing capital structure. So here's an important thing though. After you release that stock dividend, remember the 1 million shares and there are now 3 million shares outstanding, okay? The value of the firm was $2 million at $15 a share. Okay, after the dividend, the value now will be $10 a share in the market, because 2 million times $15 is $30 million. But now the market cap of 30 million is now going to be divided not by 2 million shares, but by 3 million shares. So your value in the market goes from $15 to $10 a share, but you own more shares. But a lot of times you see stock prices dropping on companies and you go, what's going on there? Why did that stock price drop? I didn't see anything bad about this company. Well, if you look into it, they might have issued a stock dividend, issuing more shares, thus lowering the value of the stock in the market. That happens sometimes. I've been monitoring your portfolios over the course of the last 6-7 weeks, and I was been looking for any of your holdings being awarded stock dividends during this time, and none have been awarded. So we don't have to look at that as far as deduction of stock price. But sometimes you see a stock price, geez, on August 27th, my stock was $15 a share. Now today it's $10 a share. Why did it go down $5? It might have been somebody offered a stock dividend. Now you own more shares, but the price has gone down to match why you own more shares. So that's something to remember, especially as an investor down the road. Why, again, is it important to pay dividends? It's public relations. It sends a message to the markets that we're going to pay a dividend because we think our company is going to keep making money every quarter, every month, every year. So we're going to keep paying those dividends every quarter, every month, every year to show that we have confidence in our business plan. But when companies cut back dividends, say we're not paying dividends, that could be a lack of confidence and bad news for the future. And usually when investors see that, they start selling the stock. But let me tell you something that just happened in the last month to me. I've owned Ford Motor Company stock forever. And I got a letter, and they usually pay dividends. Not much, but they pay a dividend. The stock hasn't been doing very good. Well, it's been doing pretty good this year, but they sent me a letter about a month ago saying, Mr. Hasse, we're not paying you a dividend this third quarter of 2021. And here's the reason why. We're using this cash to invest in electric sustainable vehicles. I said, fine, that's okay. Thank you for letting me know, because I know if you do this right with that cash, the stock is going to do better. And maybe next year you'll pay me a better dividend. So I let it go. I said, that's fine. Thank you for letting me know at least. A lot of companies don't even let you know that. But some investors, when they got that letter, sold Ford. They sold Ford, saying, I'm in Ford because I want the dividend. Forget it. I'm out of here. Okay. But there were just as many investors laying in the weeds that came in and bought that stock when they decided to sell, because they have confidence that Ford is doing the right thing in these markets, sustainable vehicles. And that's why the stock price has done pretty well this last summer. Ford has been one of the better performing large cap companies in the last couple of quarters. They've done very well because why? Like Tesla, like a lot of the leading technology firms are investing in the future, and investors like that. They like companies that are looking ahead into the future. I'm not going to get into stock repurchases. That's too detailed. All right, one more thing. Where is it here? Ah, here it is. Who decides dividends? And it's usually the managers of the company, the top level management, and they would recommend to the board of a certain dividend, and the board says, no, that's too high, cut it. But the managers of the business, the CFO, the CEO, the controller, the treasurer, the investor relations people of a business, they decide dividend changes, and then they recommend them to the board. Now, remember, the board members of any company are probably some of the biggest owners of the business. They own most of the stock. So they're going to want to see dividends because it's to their benefit as well. Factors that decide dividends are payout ratios. In other words, if I'm making $2 per share in profit, $2 per share, my profit margin, earnings per share is $2, and I'm only paying out a 10-cent dividend, you're going to get some people PO'd. You mean you're making $2 earnings per share and you're only paying out 10 cents a share in dividends? That's a lousy payout ratio. What most companies do is we have a 40% payout ratio. In other words, if our earnings per share are $2, we're going to pay you a dividend, 40% of that, or 80 cents. You'll get an 80-cent dividend based on that ratio. Next year, if our profit is $3 per share, earnings per share, you'll get $1.20. Many companies use a payout ratio to drive their dividend plans, and so investors know that they're going to get a dividend check based on a certain percentage of the profits of the company. That's an important bit of information for a lot of companies. Dividends, this is a good expression here. Since investors do not need dividends to convert shares to cash, they will not pay higher prices for firms with higher dividend payouts. In other words, if a company increases their dividends, that really won't affect the stock price too much, because investors are not, they're in it for the stock and the dividend. They're not going to sell the stock anyways. They're in it for the long term to get the dividends and stay there. Dividend policy usually doesn't drive the market value or the market cap of a company. When I remember that graph I showed you earlier about optimal capital and the maximization of value. That's what drives investors in investing in businesses. If they know the cost of capital is cheap and they're at their optimal value, then they'll buy the stocks. Dividends don't really drive that value. They're just a return after the fact. And that's where dividends don't really drive the value of a business, not like the cost of capital can do. That's an important concept. Okay, I could go on and on this for hours, and that I really bore you. But those are the key parts of capital structure, understanding how debt influences value, debt influences risk, and at the same time, dividends are the offshoot of that, awarding your equity shareholders, equity investors, a piece of the action. John, do I see your hand raised? Or Carlos, is that your hand raised? Do I see that there? Why is there a hand there?
No, not mine.
John, is that your hand being raised?
No, not mine.
Okay, sorry. It's a hidden hand. Well, that's okay. So that's the point I'm trying to make there. Okay, now I want to go back to another thing before I cut you loose tonight, and I don't want to throw a lot of stuff at you because I know you're working on your Road Kings and getting that going. But a couple of things back to the Road Kings case. This case, I think, represents 15% of your course grade. All right. And the key thing about it is I want to get a feeling that you guys as a team all participated in the end product of this. Okay. That's where you'll get the A work. Even though I might disagree with your interpretation, even though you might have calculated warranty incorrectly, as long as I know that you were as a team putting this information together, interpreting it, analyzing, and then answering the questions as a team, you're going to get an A. Trust me. It's the team concept of this that I'm important on. Finance is not, and I think I mentioned this before in our class, finance is not like accounting. Accounting is black and white, debit and credit, profit or loss. It's black and white. Finance is all about interpretations. Brittany can tell me, I love Apple Computer. You should buy it, Mr. Hassey. Where Rudy would say, I'm staying away from Apple like the plague right now. You're both right in how you interpret the state of the company. That's where finance is different. You can interpret information differently. You're all your 9 teams are doing Road King's case. But I assure you, all 9 teams will have different interpretations and different answers. And all of them could be right. The key thing about you being right is how you and your teammates put together your analysis in that paper format. How you explain yourselves. That's the key. If you do that correctly, you'll get an A. That's the most important part of this project because, and I've had this happen to me all the time in my life, where I decide to do a financial strategy and then somebody else says, Rick, no, that's not right. You shouldn't do that. This is the reason why. I said, well, I don't see it that way. This is why I'm doing it this way. Sometimes I was right. Sometimes I was wrong. Because why? Where accounting is the past, finance is the future. You're looking at the future in Road King's case. You're taking a look 20 years down the line. And that can be interpreted a variety of different ways. It can be interpreted on how you determine the cost of capital. It can be interpreted about how you determine how you use inflation in your analysis. It can be determined on how you determine your warranty costs. It can be determined on how you determine the cash flows as a whole going forward. And every team will have different interpretations. That doesn't mean one team is right and the other team's wrong. No, it's your interpretation. The key thing is how you explain and answer those questions of your interpretation. That's where you'll get the A. If you just do the spreadsheet and crunch the numbers and just walk through the questions and not give me very many specifics or what you think is going on, you're going to get a B or a C. But if you take the time to explain your ideas, your interpretations of what these numbers tell you, That's what I'm looking for. So as you begin to write that paper this week, or I've already wrote it, that's what I'm looking for. Everybody's going to be different. Trust me, the case is set up that way. It's looking for your interpretation of that analysis. And that's why if one person does all the work for this case, you're not going to get an A, even though that person might did an outstanding job interpreting it. But what did the other two people do? You didn't work as a team. That's the key, to come up with the data together, talk about it, write about it. That's what I'm looking for as you begin to close this down. So heading into Saturday in our review session, that review session should be any last minute problems you have with the number crunching, any last minute questions that you might ask me about. Mr. Hasse, what do you mean by this question? What do you mean? I had a question today. Can I ask this? Tell you guys this? Hang on, let me think about that. I don't want to give too much away. Oh yeah, let's go to this. Hang on. Be right with you. Here it is. Hang on, I'm bringing this up just a sec. Here we go. Here's the Road Kings case. And I had this question today. Question number 3. Mr. Hasse, what do you mean? What is the company's cost of capital? What is the appropriate discount factor, which may be different for you to use in evaluating the bus project? And I had a couple of students ask me, well, Mr. Hasse, what do you mean by that? What are you looking for there? Okay, well, what I'm looking for is you're determining the WACC in this problem, and that's going to be your discount rate. The WACC is going to be, but if you were a different company or looking at a different perspective, what other types of interest rates would you use as an alternative to using WACC? Now, the answer I gave to this team that asked me the question, I said, you could use inflation. But is that an appropriate discount factor? Yes or no, it's your interpretation. But I'm looking for in that question number 3 is what other interest rates could you use as an appropriate discount factor? That's what I'm looking for there. In other words, it's asking you to think, research, interpret what else is out there besides the WACC calculation that I can use as determining the value or the discounted cash flow value of this company. That's what I'm looking for. So it's interpretation. Every team is going to have different ideas. If you use inflation, I've given you that. You can use it, but you're not going to get too many points on that. There's a lot of other interest rates that you could use as an alternative to WACC. And what would that be? I'm asking you to comment on that. That's the key. There's no number crunching there. It's interpretation and your opinion as somebody who's looking at this situation for the Road King Trucks Incorporated. So that's what I'm looking for in your paper. And that's what I'll be talking about again, how you're doing that in Saturday's review session. So I hope that kind of helps. And again, as you go through these 6 questions in the next week or so, if you have concerns about that, do what that team did to me. Ask me today about what that meant. What am I looking for? And I'll be happy to tell you that in that answer. I won't tell you the answer, but I'll give you where what I'm looking for, what direction I'm going in that. So I hope that kind of helps you relate to that. Okay, now, an off the record comment before I let you go. This has been a new experience for myself and for everybody here this fall session, because it's only been 8 weeks of a class, okay, which is something new for Laverne. In the past, if any of you have been students here before, it was all 10 weeks, not relaxed, but still a little bit more, less intense. And I've built this class knowing that, trying to get the things that you need to have learned so you can move on in your studies down the road, but also not drive you totally bonkers by all this work, okay? And I think sometimes I've succeeded and sometimes I haven't, because I can see that in your work that you give me. I can see some students say, you know what, I'll just give them this because I'm done with it, okay? And there's nothing wrong with that. I understand that. But I take that into, I'm taking all this in account in my grading over these next couple weeks. I'm still recording this. I probably shouldn't, because if this gets to my dean, she'll probably get all mad at me, but the hell with it. All right. But I take that into account in my grading list. I know what you guys are having to do and get out. And I know it's difficult in this type of environment to try to email team members and get somebody in communication when somebody's working or somebody's doing this and somebody, I know it's difficult. So I'm taking all that into account. I'm not going to say that I'm going to give everybody an A, which I probably won't, but I'm taking this into account of what you're going through. And if any of you are having issues or troubles in trying to get all this done, please let me know, okay? We don't have much time to get everything in, but just for me knowing that, and I maybe can assure you that you're doing everything fine and you're on the right track, please let me be able to do that if you're coming into those situations. I don't want you to drive you guys nuts, because guess what? Some of you might be taking another class in another 2 weeks with another 8-week program, because you're anxious to get the hell out of here and get your degree. I don't blame you. All right. But how you get through this and how you manage it amongst and how you do all this is very important. I know right now we're looking at the schedule for next spring. And right now I was told this week that I'll be teaching in Burbank on the campus next spring. Now that doesn't do you guys any good. Okay. But it does, or I'll be teaching in Ontario. I won't be teaching at Vandenberg. I won't be teaching in Bakersfield. But these are campuses. Now we're beginning to get the professors back to the campuses beginning next spring, which is a good thing. Probably good for you all, whatever course you're going to be taking. But just so you have an idea that things are going to be changing back to normal more and more every session. But again, some of you, and I know I've talked to some of you kind of like this format. Some of you don't. But to each his own. But this format will continue into the future. We'll continue to offer these classes online and in hybrid and in remote. That's just a wave of the future, but we are going back to campus gradually in the future. So don't anybody get too distraught about that. We are eventually coming back to campuses, and those will be offered to you and available to you down the road. Okay. So the next time I will see some of you might be Saturday morning. The next time might seeing some of you will be next Monday via video and talking about the final. And the last time I'll be seeing you will be next Wednesday, a week from today. So kind of take a look at what we've talked about. You have this video. Take a look at all the things I've posted in Blackboard. If you haven't done the paperlet yet, look at that sample paper. That should help you really, will help you begin to put this all together. Anybody have any questions or concerns, please? You guys are too easy. Come on, you're supposed to bust my chops on this stuff. No?
Will you be available for discussion tomorrow?
Tomorrow's Thursday. I will be available, yes, at my time tomorrow evening. Correct, Jose.
Okay.
Thursday evening. Now, just for the sake of transparency, I have a couple of teams coming on to talk to me at the 6 o'clock hour tomorrow. That will probably take about 15 minutes. But then when they're done, I'll open back up the Zoom again for anybody else who comes on and signs on. If you want to text me or email me in advance, say, Mr. Hasse, can you reserve 6:30 for me or 6:45 or whatever? You feel to do that. But I do have a couple of teams coming online, as they say, at 6 o'clock tomorrow night, who are about ready to climb the walls and are committing going bananas. And so I'm going to talk to them for about 15 minutes, but then I'll be available 6 to 8 o'clock tomorrow night. Okay, Jose?
Okay, sounds great.
Okay. I got a chat question here. Let me make sure. It's 1-1 Dodgers. Yes. Thank you. Whoever cares. We're more concerned about now whether the LA Kings will make the playoffs. That's what we're concerned about. And we're more concerned now that the Chargers are going to have a better season than the Rams. How about that one? And we're more concerned now. You guys know about this, that we're now only going to have one graduation a year at the University of Laverne. Is everybody aware of this? Our graduations now will be every spring. We won't have any more winter or January graduation ceremonies at Laverne, which to me is okay. That's my opinion. Why? Because the springtime graduation is, you can invite more of your family. You're not limited in tickets. It's outside. All the faculty are there. You can introduce the faculty. You can introduce Professor Hasse to your family and introduce and meet them in live and in color. It's a lot a better day. Now, it's not as convenient if you have 2 graduations a year, but I know Rudy would like the outdoor graduation because he can bring his 6-pack underneath his graduation outfit, have a couple of pops during the graduation. And I know that's what he's looking forward to. All right, so that's another thing that just was announced this week, is we were having just a spring graduation every year. And I think they're announcing it that it's going to be on campus here at Laverne. And some of you might never only see Laverne campus once at graduation because you're all out in other areas, which is cool. So that's a fun day. If you can invite your family and people and your kids, that's kind of a fun, and have them meet your goofy professors. That's kind of fun too. All right, you guys are up to date. Anything else? Anybody has anything to say? Chris, what are you up to tonight? I don't usually see you. What's going on?
Oh, not much.
All right.
Just
What's-
felt like putting my screen up today.
What's your background there? What's going on? Are you in the forest or something?
I'm in the jungle.
Jungle. Ooh,
Yeah.
all right. Cool.
This is my Apocalypse Now background.
Ooh, cool.
Yeah,
Melanie
that's-
is in the sky. Chris is in the jungle. Rudy's in jail. Darlene's at home. So I got that figured out pretty good. Rudy's, it's LA County Jail. They have a space there for getting class. No, I shouldn't say that. That's not very nice. Sorry, Rudy. Funny, but not nice. Esteban, smile. What are you doing? Mr. Salazar,
Dinner time.
what are you having for dinner?
Ramen.
What's for dinner?
It's like their empanadas with some rice. My
What's the
diet
beverage?
iced tea
What's the beverage of choice?
is in Arizona. An iced tea.
Oh,
I'm
yeah.
addicted to those.
Is that any good?
They're addicting.
All right. I'll let you go, guys. Go. Okay. Thanks, everybody. You need anything, you know where I am, and I'll see you all on the internet in the next few days. Okay. Adios. Take care.
Bye, Professor.